Good evening and welcome to the Australian Stock Market Show. We do hope that you've had a great week so far. Now, Albert Einstein once said that education is not the learning of fact, but the training of the mind to think. Tonight, as we answer your questions, bring you our upfront, no BS approach to all things stock market, our aim is to share how we as experts think so that you gain insights into the way forward for you. Now, our main topic for tonight is on the hottest stock market sectors in 2022. Hello, I'm Janine Cox, your host for tonight, and joining me is Dale Gillham, and we're Australia's most trusted stock market educators. How are you today?
I'm good.
Yeah?
I'm very good. But I'm sick of media.
Oh, okay.
I'm sick of watching 10, 9, 7 and all that crappy media nowadays.
Fair enough.
It's like Groundhog Day on the TV, isn't it?
You watch Sky Business at all?
I do little bits. Yeah, I do watch Sky Business a bit, but I'm just completely over our mainstream media who just don't. They're just not balanced at all, and they're just. How do you put it? They're just crap. They're not doing journalism.
Yeah, look, I mean, I think that's been a complaint around the world, hasn't it?
Oh, yeah, and the thing is, you've got to, I think it's driving everybody to go more to YouTube and those sorts of places and search for things. So I think, we do need to tighten all this up. But I mean, and look,
So
I always call the TV
Yeah, sorry.
Sorry, I was just saying, I always call the TV an electronic income reducer anyway, so why watch it? It actually makes you broke. The more TV you watch, the more you're not doing what you should be doing and go broke. So that's what I'd say.
Okay, so that's the important thing about the stock market.
Turn the TV off, but keep this YouTube on. Now, before we get into our first segment for tonight, again, we're going to take some live calls on the show. So if you do want to chat to Janine and I and ask a question, then this is your opportunity to pick up your phone and give us a call. Now, the number you do need to call is 03 for Melbourne, 92909988. That's 03 92909988. And to get things started, the first person to call into the show right now will get a free copy of my latest book. Now, I know both Janine and I are super keen to chat to you, so pick up your phone right now and get dialing.
While we wait for you to call, it is the fourth Tuesday in the month, and this means we take a look at world currencies. So let's get into the charts.
All right, on your screen right now, we've got the watch list for all the major currencies, and it's set on monthly. I can actually read that tonight.
So is this starting to get more interesting now that people are thinking about travelling potentially next year or in 2023?
Well, it's not that. It's talking about your cash rates. It's also talking about inflation rates, because inflation rates and cash rates will affect all the different currencies. So what is it? Where can you travel? What can you do? What currencies are going to be in demand? We've also got supply chain issues, so therefore that's, obviously if there's a lot of things bought and sold, like iron ore's bought and sold in US dollars, so what's happening there? So there's a lot of things affecting currencies at the moment, isn't there?
Yeah, it is quite interesting to see. Looking at the board there that we've got on the screen, the Australian dollar versus the New Zealand dollar, well, it's all a sea of red, as you can see.
Isn't it?
Yep.
That's not what you want to see.
Well, look, I think it's good. I'd like the currencies to have a bit of a breather at the moment versus the US dollar. So Aussie dollar, particularly if you look at that, I'll just quickly skip down here against the US dollar, is actually down 4%.
Wow.
So I'd like to see the Aussie dollar soften off. It's 72.2 now. I'd like to see it get back to 71 something, ideally.
Okay, so you don't want it under 70?
I don't want it under 70, no. Yeah,
okay.
Ideally somewhere around the 70, 71 mark is a nice place for it to find support and then start moving back up again.
So the lower that gets, the more expensive imports get and the cheaper exports get.
Yeah,
so that's
purchasing power is diminished.
Yep, which is fine. I think people should be buying more Aussie-made stuff anyway.
Great. So you're doing your searches for Aussie-made online?
I do. I buy all sorts of stuff Aussie-made, or I try to. I mean, my recent guitar is completely 100% Australian, including all the wood in it.
Just try and buy a pair of underwear online that's Australian-made.
I think you'd be struggling, wouldn't you? Because Bonds went overseas, didn't they? To start making it. So, your Bonds aren't Australian. I mean, they're Australian-owned, but you're trying to get Australian-made. I totally agree. And I think this whole thing, this COVID situation, is giving us a great reset because we were getting so much from overseas and now we're struggling. Like, talking in the US today, there's a big US supermarket chain that's now limiting everything in the store to 2 items per person of that one thing.
Wow.
Because supply chain issues are big issues, and we're starting to see them in Australia, where trucks aren't getting around. All sorts of stuff is not happening to get the goods we need around there. So I don't know. Maybe it's time to stock up on baked beans.
Well, look, I mean, yeah. Which country would you ideally like to go to if you could travel overseas right now?
If I could travel, I want to go to Europe.
Well, we won't let you go, but if you could.
I know you won't, but I'd love to go to Europe. I had a whole trip booked to go to Europe before COVID, and I still haven't gone. I was going to do a river cruise the whole bit. And
yep. So should we have there might be other people out there looking at the Australian dollar versus the euro, but there's a few people that we know that have done our courses that trade currencies as well, and they're trading the major ones. So the Aussie US dollar, but they're also trading the
Aussie
euro,
the yen.
Yep. So they're trading the yen as well, which is another interesting one. But shall we take a look at some of the charts for the, what about the Australian dollar versus the euro? Let's just have a look, because this is where you would like to go, ideally. So I'm going to look after your interests here tonight.
I'm going to be able to go for at least a year or more.
Well, look, actually, you really want to get going sooner rather than later, don't you?
I can't even go to a coffee shop without having to scan and bleep and do all sorts of crap. So how am I supposed to go to Europe?
You get a full body search.
I know. It's like, smile, Dale, we're taking your photo too.
So what we want to see now is we ideally want to see the Aussie dollar, for people who want to travel, we ideally want to see the Aussie dollar jump through this level here. So let's have a look. What have we got? So 65 cents, say, and a half. If it gets above there, you might start getting excited about your purchasing power over in Europe.
Well, you would, but again, it's about where we're buying most of our goods and services from, or goods from, and a lot of them are coming from China, because like stuff you buy online, a lot of it's coming from China. Even if you're buying it on Amazon and stuff like that, it's still coming from China and those sorts of places. So let's have a look at the Chinese renminbi, that sort of stuff. I mean, obviously, there's a lot of other currencies that do affect
I've got
people.
to find it. I need some glasses to see it. I cannot see it.
The first one or the second one on the left. Yeah,
is it?
That's it. That's CNY.
Yep, there we go.
So we're getting weak against the Chinese. Okay,
so our currency is actually taking a bit of a dive. I'd expect if it does come back, we won't see it come back too much further, maybe somewhere between this 4.5 and 4.6, where it looks like it's heading to at the moment. So it's interesting to see.
Well, the lower these get, the more attractive Australia becomes as an investment too, because they can buy more, whether it's property or buy shares or whatever that is that they can get into. So it makes us a little bit more attractive as a nation in terms of people, overseas countries and overseas institutions investing in us, which is really what we need now to try and support our market and push for that next period.
All right, well, that is all from us on World Currencies. Now, it is time to get into our first email for the night.
Okay, our first email tonight is from John, who says, "Hi Dale and Janine, someone recommended the share 29M to me, said it could be long-term holding. What do you think about this share? Regards, John." Great question, John. I've never heard of this stock, have you?
Interesting that they said long-term holding, don't you think?
Well, now I look at the chart, I'd say that's quite interesting how they could say that sort of stuff.
Yeah, look, I'm actually losing myself in this chart because there is not much data. So let's just change this. This is the monthly chart. I'm just going to change it to the weekly chart so I can see what's going on.
It would have been, obviously they'd have to be talking fundamentals from that point of view. So,
yeah.
But he doesn't say whether he owns the stock, does he?
No, but look, I mean, I think the challenge for anyone who's purchasing a stock that's newly listed onto the stock market is the volatility of the stock. So that's one big thing. So obviously when stocks trade on the market, at the start there's always this hoo-ha in the beginning. The brokers are actually have vested interest to get the stock actually taken up in the marketplace, and then the stock usually rises initially, but then falls away after that. Now we have seen this pullback in 29 metals, which occurred into this low.
That's been a good listing. That's been a good listing.
But it's still early days.
It is still.
Quite a lot of stocks will rise.
Yeah, you can't say that long term.
At the start for the first 4 to 6 months and then pull back after that. So we could see a pullback into 2022. But if it does start heading above this high here in November of 280, then I'd expect it's more likely to take out the high in October and keep going. But it's a bit of a hurdle for it to get over.
Yeah, but if you're looking for a long-term buy, what would you go?
I wouldn't be buying a stock like this for long-term. I wouldn't buy a stock of a float for long-term.
No.
It's a speculative investment. Yeah.
So that's our answer, John. Now I believe we've got a caller on the line. Is it Daniel?
Hey, yes it is.
Hi, mate. Thank you for joining our show. Where are you from?
I'm in Cronulla at the moment, in Sydney.
Good. Overlooking the water, probably drinking a pina colada and wishing we weren't there, right?
Oh, mate, I wish. No, it's not that glamorous.
Cool. You got a question for us tonight, Daniel?
Yeah, well, I guess I just wanted to get your opinion on, and I think I heard you say you're not the biggest fan of ETFs, but I'm pretty new to investing, and I've been holding NDQ for about a year now, a little over a year.
Yep. NDQ.
And I just wanted I just wanted to get your opinion on what you think would be, I guess, a good maybe next move, because I'm looking to get a little bit more control of that investment, or of my investment, and maybe not have it in just sort of one overall sort of, ETF, and maybe start to diversify a bit more.
Good. Is it a diversified type of ETF, or is it an index tracking one? I'm not sure. I'm not familiar with that one.
Oh, it tracks the NASDAQ 100.
Okay, so it's a little bit different. You're looking at the US market and tracking the NASDAQ, so it should have done okay. But look, we're going to have a look at it. Janine is going to bring up the chart any second and have a bit of a look at it. But you're really, really wise to start taking control of it yourself. And I know I was doing this last week, actually, on one of the recordings I do for the US for Flix.net, and I was talking about ETFs. I'm looking at the S&P 500 index type of ETFs, the best ones there. And if you'd bought just the top 10 stocks in the S&P 500, you would have dramatically outperformed the ETFs. So it does pay to take control of your own investments. You just got to learn how to do that. But how about Janine has a look at the chart for you?
All right, so is this the right one? We've got NVQ there, which is actually obviously a US,
I got to put my
a US ETF.
Yep,
now,
that'd be the right one.
I'd have a few questions, I guess, in buying ETFs that are not Australian ETFs.
Yeah.
So you can get plenty of Australian ETFs and ones that have exposure to the US market that are actually hedged against currency exchange. So I don't know what the issues are there.
Yeah, but you can buy these things through some, and I didn't ask him how he went and bought it, but you can buy some of these through some of these apps online. I think Stake, you can buy US stuff like this. So you've got to look at the costs involved in getting them and holding them.
But I don't see any attraction to purchasing an ETF like this when there are so many, good ETFs that you can get that are locally.
Yeah, and I think probably the other distinction I think I need to say before we finish up on this question is that with ETFs, index ETFs I just don't like. I just think you might as well bury your head in the sand and go somewhere else, because they're not really looking after you. Better buying the top 10 stocks on the market and sitting those year in and year out, you'll do a better return. But when you're looking at specific ETFs, like in a specific area, and it could be areas like gold or silver, or it could be robotics or artificial intelligence or lithium, all those, or small companies, I don't mind those ETFs because it allows you to get a nice little spread of companies or a bit of diversification in those sorts of areas. But index tracking ETFs like this, I'm not a big fan of. You would have been better off holding the top stocks in the NASDAQ.
I agree. All right, our next email is from Chris. Hi guys, I've just read your book for the second time, how keen is that, and made so much more sense than the first, and given me quite confidence boost in my analysis. I'm holding ANZ, bought at a terrible time for $29, have a stop loss at $25.50, and just watching for now. On the weekly chart, there appears to be a solid flag pattern formed, just beginning to break out. Can you confirm this for me and critique my stop loss price? Chris. Happy to do that for you, Chris. All right, let's just have a look there. You're getting a bit lost there.
I don't even know where I am, mate. It's too far away from me.
Yep. All right, let's go to ANZ quickly on the chart there. You can see on the left-hand side that ANZ has formed this weird consolidation pattern. It's quite lovely, actually, but it is strange to see a stock do this. And we know that ANZ's had a buyback underway. And recently, we thought that ANZ may have had the potential to hold up as a result of the buyback. It did actually hold up more than Westpac. It's held up better than any of the other banks so far, I'd say, except for NAB. NAB's actually held up, has continued to rise recently, but may also come back eventually. But looking at ANZ and answering the question, I think there was nothing wrong with necessarily where he was buying, depending on the day that he actually bought. If he bought when it was pulling back in here, then I'd say that he might have been trying to get it a bit cheaper, and that's always a place to get burned. However, I think the downside risk is quite limited with the stock.
I do too. But I think it's not wanting to fall away, is it really?
No, but he could get taken out as part of this move down. There's still a risk that could happen, and then it just turns around and goes back up. So that's the challenge here, is being able to set a stop loss that's, that you're comfortable with, but
Yeah.
also that makes sense technically when you're looking at the chart.
Totally agree with all of that.
So would you hold it, Dale, then if it starts to fall away further? Because at the moment it's closing
As a trader, I would exit it. But
at the top of its bar.
What's the plan though? Is the plan medium to longer term or short term? Because right now, a little bit of short term downside is not a big issue if you're a
True.
long term holder.
Yeah,
But if you're more of a trader, then you'd be exiting, wouldn't you?
you would.
You know, so that's what I'd be looking at the moment. But you know, I don't think it's going to fall too much if it does fall.
All right, it looks like we have another caller. Fantastic. We have Raj on the line. Hello, Raj. How are you today?
Good, thank you. How are you?
Great, thank you. Thank you for calling into the show. I'm just wanting to know, where are you calling from?
I'm calling from Perth.
Perth. Oh, gosh. I'd love to go over to Perth. Ah,
They won't
wouldn't
let
you
you
love
in
that?
at the
Beautiful day
moment.
today.
Oh, they won't let us in at the moment. We're the Mexicans still. Look, Raj, would you mind just sharing with us what your question is for us tonight?
Yeah, my question is regarding the company Megaport.
Okay, interesting choice.
Bought that one $16 few weeks back, and just for short term, and just want to check what will be the right price to like exit or what target after this upward trend.
Did you say what's a good target?
Yeah, exit price will be the just want to check what is not sure what time to exit from this company.
Raj, would you mind me asking, do you have a strategy to exit this stock?
I bought it for short term, like just short profit, like yeah.
But not a proper rule to exit at this stage?
No,
Okay. Well, that's all ahead of you, you know.
I can hold like few more weeks, but not more than not for long term. I don't want to hold.
Yeah.
Yeah.
All right, Raj, thank you very much for that question. Very interesting stock, and we'll have a look at that one now on the screen there. You can see that Megaport on the left-hand side, it's been trading to new all-time highs. So he's just purchased it. Now, often when stocks are booming like this one has, they get talked about. And so then people think, I've got to get on that, and I might just take it for a couple of weeks and then see if I can make a quick buck out of it, which is really risky.
Oh, look, it is. That's a risky strategy, and if you're
Yep.
buying, you need to know where to sell, not just guess at it. And I'm not having a go at Raj, but you just don't go, oh, I'm going to buy for a few weeks and then sell somewhere, unless you know how you're going to do that. Because you might as well just flip a coin. So he might as well just flip a coin right now and go, buy or sell. If it goes heads, I'll sell, and if it's tails, I'll hang on to it.
Yep.
And that's really what it's about at the moment. It's had a little bit of a couple of days down this week, but there's nothing there telling me why would I even look at selling it right now.
Yeah.
It looks really, really good.
It does look good.
And that's the golden rule, isn't it? You stay with stocks that are going up and get out of them when they're coming down, but when?
That's right. And so therefore at the moment it's come down. It could come down for another week or two, for all we know.
Yeah, it could. And then, he might sell out and then it goes back up again and it goes back up.
But he wanted
through
a price like to exit, and
Well,
that's the issue,
we're not
isn't
going
it?
to do that, because whatever price we say, it's going to be wrong, if that makes sense. If you know what I mean?
Because we don't know the right-hand side of the chart yet.
Yeah, correct, because it's going to be that sort of a guess. Anything else you want to add to it? Or?
Look, I like it.
I do like it.
If I had purchased it, I'd be staying with it for now because I don't have an exit strategy on it. But then I wouldn't be necessarily trading on, a few days on this sort of stuff.
One thing interesting Raj says was, he said, I need to sell it within the next few weeks. And so to me, you should never go into an investment with and he may have a set time that he has to sell it because he's got to pay for something else. But to me, that's a wrong decision. You never go into any investment, especially unless it's cash, that it's a guaranteed product, capital guaranteed. If you're going into any speculative investment and you need the money, then you shouldn't get into it in the first place. Because
I'm really glad that you said that, because I had a conversation with someone today who was talking about doing something in that regard, but there wasn't a definite end date for when they needed the money. Now, I totally agree with you. It's just too risky because your investment could be down and you need that money. Remember, we had that young girl who had her education fund and she put it in the stock market, and then the market fell. So then she couldn't pay for the course that she was supposed to pay for. So things like that happen all the time.
People do it all the time. I mean, I was only speaking to a guy a week or so ago. He's got $1 million in the marketplace and he's got like dozens of shares. I mean, like, I have to take off all my shoes, socks and everything to count the number of shares he's bought. And I do that 3 times over. Like, he's got bucket loads of shares. And he goes, oh, your course is expensive. And I said, compared to what? And he's been taking tips and stuff from these advisors, and a whole chunk of his shares are down and he's losing big money, and his average return is, for this last 12 months, is way under 10%. But he doesn't want to sell some of these stocks and take a loss. And his biggest thing is, I don't want to risk my money. And you've got, you've got 2-3 dozen stocks.
Well, if the market's pulling back right now and he's got that much money in there.
He's going to get slammed. And it's like people go, I got to pay X dollars to do your course, but he wouldn't have got stuck in any of that. He would have avoided it completely.
And no rules.
He's got no rules, and he's taking advice from other people, and then he's expecting to come this magic outcome, and he's actually underperforming the market by a long way because he's holding on to stocks that he shouldn't be, but he should have been getting out of them, keeping the portfolio tight and having some buy and sell rules. And the amount of the course cost is just insignificant in the bigger scheme of things, even in the smaller scheme of things for him. It'd pay for it in less than one trade.
Yep. Okay.
So, but let's move on.
Well, thanks for adding to
that's
that.
Me on my high horse. I'm sorry. I apologise to everybody.
You're saying it because you're concerned about him. That's the
and
thing.
I'm concerned about Raj because what he was saying concerns me. It really worries me that he's not trading on knowledge. He's just sort of guessing when he's got to get in, get out again. He's done well on this stock, but he does need to tidy that up. So I'm sorry, as I don't want to be rude to you, Raj, but please tidy up the exit strategy. You really need to. Now we've got a question from, I think it's Andrew. We do have a question from Andrew. Who says, hello, Dale and Janine. So he puts me first because I'm more important. I sent a question about Heramed HMD a couple of months ago. I had bought on fundamentals at around 18.5 cents. And at the time, I think Janine liked the chart. So it seems I have broken out now, although a bit too much or a bit too quick for my liking. Where do you think the share price is heading? Thanks, Andrew. Well, Janine will give you her updated opinion on this one right now, Andrew.
Look, there's Heramed, and I believe that he bought it somewhere down here, around this level here, which at the time was extremely high risk thing to do. However, I think this is an example.
Monopoly's got out of jail free.
Well, I think he's learnt a lot from watching some of our shows, because when we talked about those consolidations that happened on those shares that were, what's it called again? GameStop. And then we looked at all of these other shares that had that similar pattern and then were breaking out of that. What this stock has done is exactly that. This sort of consolidation that happens at a low and then a breakout afterwards, and it's kept going. So he's in profit, and that's lovely, but it is high risk and it could just evaporate at any time. So the point I would say is that, if I was trading a lower liquidity stock and I'd made a profit on it, I'd want to be taking some money off the table at some point. So it's about deciding on what basis are you going to do that. Now, there's no rule on the weekly chart, but I wouldn't necessarily be using a rule on the weekly chart to take some money off the table.
No, not on a stock like this. I mean, he's probably made 50% on his money roughly, I would guess, on this one. But again, it's a bit more, as you were saying, it's a bit more buy and pray rather than good strategy in terms of this sort of stock.
Yeah, we don't even have, the nearest low is there. We don't even have there's not a low right now that we can use. We were still waiting for the next one to unfold. So you're really just sitting there, just dangling, basically, waiting for that next exit approach.
It's like getting on a train and not knowing where you're getting off.
Yeah, and that's the challenge with some of these really volatile ones.
Yeah, now, but before we get into tonight's topic, if you are enjoying the show, then please hit the like button now so that others can find it and also enjoy the show. Now, if you are keen on understanding the stock market, then go to our website, wealthwithin.com.au. There are absolutely truckloads of free articles and lots of other stuff. You can also get a copy of my first book, How to Beat the Managed Funds, by 20% for free. You just got to pay the shipping, and that's for you, Raj. Go and get that book because you'll really look after you. Now, later on in the show, we'll give you another opportunity to call into the show and ask Janine and I your most burning questions. So stay tuned for the opportunity, and more importantly, be ready to dial when we tell you it's okay. Now it's time to get into tonight's topic, hottest stock market sectors in 2022. And we'll answer that burning question that I know you've all have, and that is whether banking and technology stocks will top the list.
Is that a question that you wanted to know? I think it is, isn't it?
I put it in there, so I want you to tell me.
Well, look. Here we go. I'm not talking about technology necessarily, because technology is such a small part of the Australian market. So I really don't think that it's hugely important. So far this year, the consumer discretionary sector, as we know, has been the best sector. Now, you can see there at the top of the screen there, 26.87% for the consumer discretionary services sector. And then financials rose 20.2%. The important question that needs to be asked and answered is, should you invest in these sectors moving forward into 2022, or should you look for opportunities elsewhere? So, this is an interesting thing, isn't it, looking at that. Now, communication services, was up 26.87%.
You didn't order them in terms of which one? So that was
I was just trying to confuse
communication
you.
Services did the best at 26.87%.
Yeah, and consumer discretionary 23.9% and financials up 20%. So, look, they were obviously the top three, but anything could happen between now and the end of the year.
Okay. Now, if you're all, you are all in luck, as Janine and I intend to share our answers to this, as which is the best performing sector, so that you can take advantage of the opportunities that might present. Now, remember, you can't buy yesterday's returns, and so what performed in 2021 may not repeat in 2022. Now, this is why it's critical you look into the future and not become fixed on the past.
We're going to discuss our view on the market sectors and, more importantly, share which sectors we believe are likely to outperform. As usual, we'll also give you some golden nuggets and tips to help you find the best stocks in these sectors.
Okay, now a common question we get asked is, how can I find the best stocks when there are just so many to choose from? Now, it is possible for everyone to do when you know how. So everyone can do it. We also hear some people say that they don't have a lot of time. And so finding the right stock should be quick and easy. And again, it is if you know how.
Understanding the chart of each sector makes finding stocks easier and far less daunting, as they give you the ability to step back out of the noise of the market, which will often distract you from what is important. Understanding this allows you to easily see into the future where the best stocks are likely to come from.
So true. Now, there is an old saying that all you need to do is follow the money. And so the great thing about having a bigger picture perspective is that you see where the big money is flowing or likely to flow before it does, and essentially have them follow you, giving you a distinct advantage.
I could not have said it better myself. I know investors think that they have to watch hundreds or thousands of stocks to find ones that they should buy, but if we go big picture first and look at the sectors, then we narrow down the possibilities. Now, I'm sure everyone watching can do this. You take a look at the 11 sectors that make up the market and make some assessment on where they are going and why. Is this exciting? Well, this is the part where you get the part of the process that gives you back the time, so that you say that you don't have. So essentially what people say is that they want more time and they're spending a lot of time doing things that are really not important. So more importantly, this process targets the use of your time so that you can achieve better results quicker, or in essence, you get the most value from your time.
So true. Now remember, the key to success is to know where to invest into the future. So understanding which will be the next best sector is a vital skill to have. What we find is so many people do the opposite and try to chase stocks from fear of missing out, as they have heard others have already made money from them. But this is not the smart way to trade. The key is to be the predator, not its prey. So stop following last year's best performing stocks hoping you will get the same performance. The best performing stocks and sectors in any one year are not guaranteed to repeat that performance in the subsequent years.
So let's look at what we've seen, and we know financial, consumer discretionary, tech stocks and some resources stocks have led the market in 2021, while utilities, energy, materials and industrials have lagged. So will these be the areas to watch in 2022? Hang tight, as we're about to give you the answers, so let's get into the charts.
Okay, now, so we're talking about this now, aren't we going to talk about stocks?
We are. We're not talking about stocks.
All
we're
right,
talking about sectors.
I'll shut up. So Dale, shut up and I'll keep going.
Well, first of all, I just wanted to expand on what we were saying before. Okay. So we looked at communications, consumer discretionary and financials, which we can see that they're all up. Okay. And then we've got All Ordinaries is up 13. So I think that any sector that performs around the All Ords or better is actually, you're doing well if you're picking stocks within those sectors. So, I'd be quite happy picking stocks in industrials, consumer staples, healthcare this year if you've done that. But what's going to be next year? Is it going to be the bottom three, energy, materials and utilities, or information technology, that performs best next year? And that's the real question mark, because one sector can perform really well for a while and then do a flip
It can.
towards
Very
the end of
much
the
so.
year and totally change the result at the year end. So because technology was doing so well, but now look.
Correct, and that was interesting, wasn't it? Technology did so well last year as well, but it hasn't done quite as well this year. But it's also about where we're heading to in the economy, like rising inflation, all that will affect some of these sectors and what we're doing.
Absolutely. So look, I mean, I'm not necessarily saying that go materials, energies and utilities at this point. We've got to look at the charts, but I'm not, because there could be some within the middle, even in the top. I would say financials are likely to continue to perform
All right, I'm
as well.
champing at the bit to look at the chart, so let's get into
All right,
it.
let's get into that
I always
then.
love this bit.
Okay, so with financials, I've actually got a bit of a, I haven't done this with everyone because we just don't have the time to cover them all off, but in the short term, the risk of the downside is the case with financials. So we could see in the order of anywhere between 5 and 8 or 10% down for the financial sector. So I've marked it up there on the chart. This is the monthly chart of the financial sector. And you can see the important thing with that, which is now you've changed my chart and I can't see what's up the top. Okay, so I can't see at all here. There we go.
What are you looking for?
So what I'm looking for is you can see the all-time high there in the GFC. So in November, we haven't even gone through that with the financials
I know, there's plenty of upside there for that, isn't there?
So there is, and so that's what I'm looking at here for
So they've done all right
whichever
this year.
sector hasn't gone through its all-time high yet. I think there's potential in there. There are still some of the sectors that have. I think there's still opportunities there, but I think it's going to get thinner on the ground. So
Combank and Macquarie have both gone through their all-time highs.
Yep.
So you'd be looking at the banks that haven't gone through
I'm not
their all-time
necessarily saying that there are not going to be opportunities to trade Commonwealth Bank again. If it has a nice pullback,
highs. Oh, you're talking the next year.
yeah, even next year, if it has a nice pullback early in the year and then we see it take off again, it could be good again. But but you and I talked about ANZ and Westpac last week, and some of the second tier banks, BOQ, Bank of Queensland, could be quite good as well down the track.
Okay.
But I'm looking at potential downside short term and then into a nice return still for next year, depending on how it unfolds from here. So if we see this pullback and it's orderly with the banks not sold off too strongly.
Which could happen over the next few weeks or months.
Yep, and then we see a nice move back up again. So definitely would be on my list, financials.
What's next?
Yep. And I'm just skipping through there. So I've got communication services, which is Telstra. This sector
Telstra.
is obviously dominated by Telstra. And you can see there's about, I'm not trying to be precise and say 13.26, but it's around 13% upside. Could be more, could be 20% upside for Telstra. It could be shorter term than next year. Like it could start this, some of that move could happen this year because it's still strongly up. We haven't seen another move down yet and it's just taken off recently. So we could see Telstra just continue to trend up.
It's such a good stock to have in a good blue chip portfolio
great,
right now, isn't it?
for growth and great for blue chip as well. So that's a really nice one. So there are other stocks within the sector, obviously smaller stocks, which are worth looking at, but you just got to be selective with that. And then I'd like to talk a little bit about utilities. So this one you and I have looked at because it has been sold off quite heavily. If we just go and have a look quickly at how far utilities has been sold off, we can see that at one point it was down about 38, 39% and is now looking like it's starting to move back up again.
It's looking much better, isn't it?
It's hit one of my levels, which is really nice. So I was waiting to see that happen. When it first pulled back here, I thought, well, okay, maybe, there's a level there, but it was just quite incredible to see the rise after the COVID low and then it just absolutely, went to the south. So AGL was partly responsible for that move down. We're now seeing a bit of a consolidation in the sector, but AGL's been making new lows. So nowhere near ready at this point in that regard. So, but this space, if you sift through that sector, could find some nice little gem.
I think that there's some really good stocks in this sector.
But in saying that, I've actually got another level way down here.
Okay.
So there's still risk to the downside. There's short-term upside potential, but in terms of how 2022 is going to unfold, because it has made that big move, I'm not 100% convinced just yet that the fall's finished. So, but it would be worth short-term opportunities.
So you want to look at some stocks now, there?
Look, I want to go to healthcare first before we look at the stocks. Now, as you know, CSL's great, a great
It is.
share. So this is the healthcare sector that we're seeing, which is dominated by CSL. I still see, if I look in here, that we've got the potential upside in here for CSL. So around about 13% too, could be more like 10. But I'd expect that there's a high probability of it taking out its all-time high. However, we know that there's a nice line in the sand underneath it. So this October low is important. There's also some support around July 2021, which is really important to watch.
But this sector looks like it can continue on its merry way. You know?
Look, I think people just rely on that because it's defensive. It doesn't mean that it couldn't surprise us and go the other way. So obviously a stop loss is important. Just because it's CSL and a big share doesn't mean you just keep holding on to it.
But there's a lot of good stocks in this sector,
in the
isn't
healthcare.
there?
Oh yeah,
There's a lot of good stock.
Yeah, so look, I'd look at ANZ, we said, and Bank of Queensland and Westpac. So this is Bank of Queensland, a bit more volatile than, say, the bigger banks. And that's Bank of Queensland's long-term chart. It's pulling back like Westpac at the moment quite strongly. But that might mean that they recover quicker. That's what I'm looking at. So we've got Telstra, we've already talked about, the telcos. Utilities, we've talked about AGL, which, as I said, hasn't bottomed yet. So that's
keep
AGL.
An eye on it.
Yep. I've also got Spark Infrastructure Group, which took off recently. So that one's out of the question right now.
It's gone too hard.
I think, there's some issues around that as well, corporate-wise. So CSL we've talked about, but I'll quickly go to the chart of CSL, see how it's a little bit different to the chart of the index, which you'd expect because it's distorted to a degree by the other stocks. But it just looks nice how it's moving up there. Sonic Healthcare is another one that I like. Cochlear also are quite interesting at the moment. Not ready yet, but setting up to be. And then we've got the energy sector, which is down significantly. Now, what's interesting to me about this space is that they used to rely on oil as a way to spark. If inflation takes off, oil is likely to be behind it because we see everything go up at the bowser, and then cost of goods and services go up. But we're seeing that people are starting to pay higher prices at the bowser, but the stocks are actually not showing a corresponding
I
move
paid the
up.
most I've ever paid for fuel the other day. I couldn't believe how much I was paying for it. It's just phenomenal.
So I think there's some upside opportunity in there in the short term, but I think it's a little bit higher risk than, say, going into the financial space.
I'm going to have to mortgage my house.
You need a good strategy to go into this space. So I quite like the energy sector as well. And I've got a lot more. If we had time, if time permitted, I could talk about those as well. But like Santos and Woodside are big players in that space. But there's also some smaller ones that are quite interesting in that area as well. So just keep your eye on those sectors.
Cool. Okay, so what Janine and I have been discussing here tonight is contrary to opinion, you don't need to spend a lot of time sifting through pages of reports or run the gamble in chat forums for hours on end, hoping to get one tip that will make you rich. Make your life simple, easy and uncomplicated. Gain some basic structured knowledge so you can locate the sectors and stocks ahead of when the masses do. That process will give you the best opportunities to profit from that. Now, well, that's it for our topic for tonight. Now, before we do get back into our next email, I hope you have your phone ready and have been patiently waiting for the opportunity to call into the show to ask Janine and I your most burning questions. So now's the time to get dialing. The number you need to dial is 03 for Melbourne 9290 9988. That's 03 9290 9988. So pick up your phone and get dialing now.
While you call us, we'll get into answering the next email, so call now. Now we have an email, a question from Tendai. Hi Dale and Janine. Thank you very much for the education you give on this platform. I bought SSM shares 2 months ago and I see it is just trending down. Your thoughts on this share, please help me, Tendai. Thank you very much for the question and for your appreciation.
Yeah.
Let's have a look at the charts there. You can see this stock has had a huge fall.
Massive, isn't it?
Yeah. Now, on one hand, you could say, it looks really risky, dangerous, whatever. But on the other hand, there's a potential here.
Yeah, it is potential there. I think he's bought too early, but I think it's interesting at the moment. That's what I'm saying.
Yeah, definitely. So, I mean, if we see this stock, I'm just going to, first of all, on the monthly chart.
I'm sitting forward on my seat. I'm waiting.
It's fallen below $1. That's an important thing because it goes off the radar then of a lot of fund managers' stocks going below that level. But I think there's a potential for a recovery, at least in the short term, and it could head closer to $1.10, $1.20. That's the potential. However, when is it going to do it? That's the question mark. Now, it has to get it to actually be on its way. It's got to at least get above that 89.5 cents. That blue line that I've got, which is roughly where Tendai purchased the stock.
Yep.
So if the stock can pull up over the next couple of weeks, and there is a support level there for it, and it could do it. But if it keeps falling away, I think you've just got to, think about, well, how much am I willing to risk?
Well, it hasn't proven it stopped falling, has it?
It hasn't, and that's the real risk with it. And stocks that continue to fall and make lows can always go lower.
Yes.
So I would say the real downside risk right now is it could end up at 40 or 50 cents. And that's a problem, isn't it? Obviously, for anyone holding it. But, if you're looking at it right now, and the challenge too, Dale, is the fact that with these smaller shares, they don't have to move far on the chart to have a very significant
huge impact on
your risk there. So, like from that line that I've marked in the sand, you can see it's about 18% to that low if you waited for that low.
So, Tendai, I think it was a great question. Thank you for bringing it up. And, as I said, there's interesting stuff on the chart, but we probably think you bought it just a tad too early. But make sure you've got a stop loss on it in case it does fall away. But if it starts to move up, then you should be right to make some good profits out of it. Now we have Now we have a question from Cooper who says, I have currently not invested into the hydro or green industry. That will hopefully be very soon upon us. Now, I would like to invest into green energy. However, I am unsure what I need to look into. Is it wise to invest in the possibility of a company such as SPN being successful with developing a product that has great potential? Or should I be taking the approach of investing in a company that is already distributing or providing green energy solutions? I'm also 23 years of age, plenty of time until I leave the market. Kind regards, Cooper. What a good question.
Great insight. So would you think that a young person that age should be investing in these sort of stocks?
No.
Okay, so where should they have a scope of view?
Well, this is, to me, there's two parts to I buy in a company like this, which is he's basically what he's saying is unproven at this point in time, or go to something that's already established. That would be my preference. Always go for something established in making money. And the reason why I say that, I lived through the tech wreck, back in the late 90s, early 2000, and there were so many companies that people were just jumping on hell for leather trying to make money out of it, but they weren't making profits. So you need to have a product making profits and good financials. Otherwise, the chances of you making money are diminished. But that's why you go for something that's much better. But I think, you pick some really good companies, pick some big stocks, pick some really good big stocks, and just have a small little play with some of these stocks if you've got the time and also some spare cash on that sort of stuff, but probably not this one.
All right. So this one's already run, is basically the challenge.
Yeah.
Looking at the chart there. So it's Spark Technologies SPN. It's probably one of the most illiquid shares that we've had on the show, isn't it? And the challenge, I guess, is, if you're looking at investing in something like that, how do you actually get in and how do you manage the risk on that? Because the downside can be really quick. So we're looking at, for an example, it's fallen 27% just in, a space of a week, I think. So that's the sort of risk that you're dealing with, and you don't want to be going into any stock like this without having the ability to make a clear decision, and you want to know how you're going to get out of it before you actually get into it, because that sort of volatility can lead to strong emotions in people that are not experienced in dealing with that, and the greed comes out.
But I think that this is a really important point that you're talking about, is all too often people think the success in the market is about taking stocks that can rise pretty quickly, but it's not that. The secret of success in the stock market is about consistency. It's been able to consistently perform and get stocks that go up. That's the thing.
So is this a distraction for him?
This is a distraction, and the answer is really boring to most people. It's just get the best, most boring stocks that consistently rise your money, and over a period of time from your young age, what you mentioned, you'll make shed loads more money than people that you'll see on chat forums that are just trying to chase every latest fad, that sort of stuff. You'll have less downside, you'll have less losses, more profits, and you'll make far more money.
But there are green stocks, or that he could buy in that have an exposure to that area that are more liquid than that.
Oh, yeah, absolutely, and I agree with all that, and they should be looking at those
Even an
sorts of green
ETF
energy.
that's got exposure to
Yeah, if we go
those.
to an
yeah.
ETF, absolutely. So I believe we've got a caller on the line, have we? Is it Joel?
Yes.
Joel, how are you today?
Good to you, Dale. How are you?
Fantastic. Welcome to the show. Where are you from?
I'm from Melbourne.
Awesome, dude. Perfect. You've got a question for us today?
Yeah, it's just with high pages. I started looking at it a while ago, and I bought in August
Yep.
for $3.
Yep.
And it's done not bad so far, but now it looks like it's going sideways.
Okay. Yep. So why did you buy into it? Is it a short, medium, or long-term trade, or what were you looking at?
Oh, pretty much short. I was looking at short, and I was looking at long. I just wanted to see how it goes because it was more or less it's a new stock.
Yep.
I'm sure it's going to fall away, but then I thought, high page is not bad. It's in use. It's a handy tool, and it may turn into a long-term investment in the long run.
Okay. Sounds like you're a bit schizophrenic there, mate. You don't know what short, medium, long term, but we'll sort it out for you anyway. So thanks for giving us a call. Janine's going to have a look at the chart for you now, Joel.
Okay, Joel, interesting stock choice, High Pages Group. I think it looks nice, the chart. However, it's like any of those stocks that have just launched onto the market. You just don't know how they're going to behave.
He could be right, though. He could be really, really right.
Yeah, well, I don't know if he's married or not, but if he met somebody at the local pub and they turned out,
good-looking dude.
Their behaviour could be quite great when they first meet, and the first few months it could all be beautiful and rosy, but then after that it could go haywire.
Okay.
So I think a stock is similar. So a stock that's launched onto the stock market, especially if liquidity could be a bit of a challenge.
That's your marriage advice, don't buy stocks on newly floated stocks.
Yeah,
Okay.
we could have a challenge with HPG in terms of its personality could change. And it looks like it might be doing that right now, given the way that it's pulled back, because it was it was forming a bit of a, a corrective move back up. But then all of a sudden it's reversed again this week. So the real risk right now is if it takes out this low here, we could see it fall much further.
I think he's probably worried because he said he bought it around $3. Now it's trading at around $3.60 or $3.50.
So he's got a profit.
So he said he's got a profit, but I think because we've seen this sort of downward move,
But why is he thinking long term on a stock that's just launched? That's what I'm unsure of.
It's because that's what I'm saying. It's some people, they start out thinking short term and it goes up and they stay with it longer and then it comes down, but then they don't want to sell. And this is what I found. I mean, how often have we seen people that they're quite happy to buy stocks, but when it comes to sell, they just go, I can't do that.
But he's got a profit.
Correct.
Why not take it?
Correct, take your profit, but it's a good business. High Pages is a good business. It's not like the last one we looked at.
Yeah.
This has got a business model. They're obviously profitable. They're floated on the exchange. They've been bullish. It's looking good. Right now, there's some weakness there, so I'd be worried about losing that profit that I had.
Yeah, I would too. And I guess, if it closes at the end of the week below this trough here, that's the week ending 12th of November, the low was 365. If I was holding this, I'd probably just get out of it and then look to get back in if it gets back above here.
Cool. Well, if you want to be like Joel and give us a call, remember the number to dial is 0392909988. All right, our next email is from Cam, who says, "Hi, Dale." And Dale and Janine, sorry I didn't read your name out, and super fantastic team. He said, can you please share your thoughts on Appen? I'm looking to buy it right now for the medium to long term. Appreciate your help and support. Thanks, Cam.
Look, I'll just sit here and let you run it all if you like.
No, you can do that. I've got to invite you somewhere. I do like Appen right now. Come and look at the chart. I like Appen.
Look, so do I. I know you've been talking about it for a while now. So, look, Appen looks interesting. It's come off that bottom, but it's still not able to push on. It's just struggling there. So we've seen this low here. What's the low? The low was 836. Now, that fall is, let's have a look at the personality of this share. We need to understand that. It is 80.8%. So this is not a stock for the faint-hearted, just because it could have upside. It could also continue to fall and end up way back down here towards the $4 mark. That's the risk. Right now, this week, it's not showing signs of strength. So I guess I would be wanting to see this stock push higher before.
Yeah, the market's a bit weak at the moment, but it does looking good. And that's really what I'm saying is, to me, you may ease yourself into this stock if you want to.
It's had a number of false starts off the bottom.
That's what I'm saying is you are correct. And if we look at the chart here, you can see there's just false start through there, there's a false start through there, and there's a false start through there. So you don't want to try and catch a falling knife, but looking at the volume, if you look at this, there's more volume coming into it now than what there was right back through here in the bullish part of it. So it's looking better. And really, you don't need to jump early, and this is where so many people want to jump into something like this really, really early, going, oh, I can get it cheaper if I buy it now, but your risk is high. You're better off letting it run a little bit, get into that momentum and the upward momentum, and then jump in on it, and you'll be so much more happier when you do that, because
because people are always looking at, oh, last week it was this price, now I can buy it cheaper this week.
Correct, and all too often, as you can see, with the amount of the emails that we get and people who ring in have said, oh, I've got this stock, I bought it at this, and now it's at this, and it's falling away because they've just bought too early. So
and sometimes the market players are actually trying to push people to buy it. They put a bit of momentum behind it. Then people get sucked in. There's reports that get put out about the stock that it could be turning around, and then people buy it, and then it just turns and burns because they're in the process of selling for some client. That happens, doesn't it?
All right. Yep. Absolutely. Absolutely. So I do like App, and I think we've got to move on to it.
We've got a caller. It is Dean on the line. Hi, Dean. How are you tonight?
Well, yourself?
Good, thank you. Good to have you with us. Would you mind telling me where you're from?
Canberra.
Canberra. Oh, wow, the capital. Gee, you must be feeling quite good there. I think it's you guys have got it easy. No big lockdowns there for you at the moment.
Not anymore. But all the other places that ring up, you say you want to visit.
Oh, look,
I'm coming to Canberra in a couple of weeks.
I must say that I don't particularly want to be around more politicians. Do you mind?
She has enough of me, Dean.
All right, don't want to get political on the show. Anyway, you've got a question for us tonight. Would you like to share with us what that is?
Yeah, Flight Centre, FLT. I'm just looking at the charts on that, more post-COVID, and wondering what your thoughts are on that. Before COVID, dividend, EPS, PE, all looked good. I guess I'd be looking at this as a medium to long-term buy, and I figured there was probably an entry around about August, but I'd like to hear your thoughts, guys.
Okay, fantastic. Thank you for your question. Really interesting one, and I'm sure there are other people out there wondering about Flight Centre.
Oh, look, I'm getting questions about this every single week, so what do we got here?
All right, so obviously this is a volatile stock, but it can be a great trading stock, Flight Centre, at times. So if we just show the whole history for us of the monthly chart and squash it. There we go. We can see the history of it. So at times it goes down for a long period of time. So it could be a year where it falls, it could be a few years, and then it has these really great runs. Now, is this one of those? Right now we don't know because it's pulling back this month, and we need to just allow the stock to pull back. Don't try to get in thinking, okay, it's a long-term rise and be using that as a reason when the stock's actually falling in price. It doesn't matter what the time frame of your trade, the momentum needs to be with the direction that you're trading. So in this case, I would be just sitting there, sitting back and waiting patiently for this for Flight Centre to turn around and prove that it's actually going to continue to go up.
Yeah, I mean, I do like it at the moment. It's just a little bit weak in the last week or so.
Yeah, look, my thinking is that there's a lot of families, a lot of elderly people who potentially use Flight Centre to go on holidays, to go on boat cruises, to take trips overseas, who are not going to be doing that in the near future. So, how long are they going to leave it? Maybe they'll do it in 2023. So maybe this is an opportunity for sometime in 2022. We just need to be watching.
Well, you're quite. I mean, I use Flight Centre all the time for all sorts of stuff that we do, but I'm not looking to travel in next year at all, pretty much.
Okay.
So, and there'd be a lot of people like me that'd be a bit scared to. I'm not scared to get on a plane and things like that, but be a bit worried about what's going on travelling
around
overseas.
the world. Yeah.
So whilst I think Flight Centre is probably going to be a good trending stock, it's probably not going to break land speed records doing it over the next 12 months until we get more confidence back in travel and tourism, etc. But I think it's probably going to be a nice stock to own and have a steady rise. I think that's where I'll be looking at.
Yeah, I agree. All right, next we have a question from Madhav. Hi Dale and Janine, I'm new to investing and your channel is helping me a lot to understand about ASX market and growth stocks. I have recently bought CU6 and the stock price is going down since I bought. Can you please say your view about this stock as I'm close to my stop loss? I'll be waiting to hear your views on this on your show. BTW, I enjoy your show and will be watching more for sure. Thanks, Madhav.
Wow.
great. Look, CU6 is not a stock that we've had on the show, so thanks very much for bringing up something that we haven't seen before.
I think you should say see you later to your money.
Clarity Pharmaceuticals. Look, now, generally, pharmaceutical stocks are quite good shares to have in a portfolio. However, in this case, we've just seen nothing but since the launch, it's actually continued to fall. Now, we don't see a lot of stocks do that after a float. Generally, there's a bit of a spike after the initial float, and then they fall away after that. But this has just fallen straight from the start.
It has, and I mean, I probably would have been at it after the first week if I'd bought it on the float.
Look, he didn't say that he did, and I was getting the impression that he's actually come into it after that. So, like, it's wise to actually wait for a stock to float and then see what it does, not be part of that initial speculation. But then there's no confirmation that the fall had stopped along the way there at all.
Well, how far has it fallen? Like, I mean, because he doesn't actually say sort of where he bought it, but if we're looking at this, we can see how far it's fallen from just where it opened here in August to its current point. If you have a look at that, let me just
Drag the tool over.
drag the tool over.
Do you want a hand?
There we go. Look at that. I'm just about getting it. But it's like,
It's a 40-odd%
over
fall.
50%. So I'm not sure where you bought it, but hopefully you stick to your stop loss, because right now it's not looking really good to me.
Yeah, and I guess, we can't really say where it's going to stop falling, because this is the problem with stocks that have floated. There's no history to go by and to do an analysis on. You need, ideally, I like to have 3 years minimum to actually look at a stock.
Yeah.
But this one's got nothing for us to gauge, so it's a big question mark.
Well, the only thing we can gauge is it going down, and basically we need to assume it's going to continue to do so. All right, that's okay on that one. Our next email is from Tony, who says, "Hi Janine and Dale, thank you for your great work and program. I've read both Dale's books. I'm looking at the chart for Joyce Corporation. It seems to be trending consistently upwards. I do not own this share, but it seems like it's heading in the right direction. What do you think, Tony?" Good question.
It's a really good question, and this is always a challenge, isn't it? When people look at, and I think it's awesome that he's identified that there's a stock trending well, because half the time we get people, when they contact us, their stock's falling away.
Yeah.
But this one's actually one of the ones that's moving up nicely. So well done in making that choice. However, I'm wanting to suggest that he's left the run a bit too late on this one, and I'll just throw it to you to make your comment on it.
No, I'm just looking straight away. I'm seeing it's illiquid, or so it's low liquidity, so that's one of it. But I do agree with you. I mean, look at the stock. If you look at that, it's not necessarily a buy and hold stock from what we're seeing. We're seeing a big, massive move. So if you haven't bought it yet, the risk is here. And I'll reference it in terms of like getting on a seesaw. You walk uphill on a seesaw, and eventually, if you've got a blindfold on, you don't know where the middle is. You just keep walking until you bang, you're going down the other side. So he could be buying into this right now.
I'm not following you.
Well, you've got to walk up on the seesaw, and the stock goes up.
A seesaw? A seesaw is something you sit on.
A seesaw? What is a... No, a seesaw.
Yeah, you sit at a seesaw. One child sits up one end.
I walk up and down.
And I sit up the other end.
No, I walk up and down it. That's the best way to do it.
Okay.
Don't sit on it.
You're a rebel, aren't you?
Yeah, I bet you sat down on a merry-go-round too. Jeez. I'm a rebel. But basically, it's got to switch over and come back down again. And right now, you could be getting right at the end point. And most people get interested in stocks right up at their end point. I mean, in these early days, you get the early adopters, but then the majority of people find out them on chat forums sort of when they're about 2/3 of the way up. And then they ride them to the top, and then they get caught in a downward move. So I don't think I'd be involved in this stock at this point in time. So that's my take on JYC. No, you don't want to do it. All right, well, we have a question now from Dale. So it's from me. That's really cool. He says, "Hi, Dale and Janine. I'm one of those that put the cart before the horse and started buying stocks with no education, but quickly realised that was very risky. Anyway, I've been lucky with a few trades I have done so far, and will go on to make better decisions with the knowledge that I'm gaining from you. Would you mind giving me your thoughts on one of the stocks I bought, ABB or Aussie Broadband? I bought it at $2.73 back in March, which I now know was totally the wrong time and for all the wrong reasons. Do you think letting it run for the moment with a trailing stop would be okay? Kind regards, Dale." So what are you going to advise me?
Well, now that I've caught my breath after the visuals I had of you of running up and down a seesaw, I think this is a kick-ass trade. I actually like it, and I think there were plenty of reasons to buy it. And I just think that right now it's pulling back and there's a risk to the downside. I'd really be protecting that profit in there. And this consolidation that we're seeing here, I guess if it fell below this low or one of these lows here, the real concern is it could come back again.
You can get a trend line up underneath that, and I would use that as my trailing stop loss, I think.
Yeah, well, are you going to let me put one on there?
Well, you can. Can you do that?
I can't even see it. I'm just totally blind here. Can you do it?
You can't even see it. Do you want me to do that for you?
Here we go.
You've got it there.
All right.
But I do like it. So
Here
I
we
would
go.
just set a trailing stop losses basically underneath that trend line, mate. I think you've done a good stock. I think it looks really nice. I think you're probably being a little bit harsh on yourself on the entry, but it probably was a tiny little bit early. But hey, you've done well. So protect your capital. And as they say, let your profits run, cut your losses short. Okay, well, that's our thoughts on Aussie broadband.
If you've called into the show and missed out this week, then keep trying, as we'd love to chat with you. Just make sure that you write your question down and be back here watching the show next week, as you'll get another opportunity to call in when we give you the cue.
Okay, now remember, the best way to have your question answered is to call into the show live between 7 and 8 p.m. Otherwise, you can email your question to us right now whilst it's fresh in your mind, and send your email to info@wealthwithin.com.au. Remember to include Wealth Within Live in the subject line. Also, show your appreciation for the show and those who bring it to you each and every week to help educate and answer your questions. You can do this by subscribing to our channel and also giving us a big thumbs up as a like.
Well, that is it for tonight's show. We do hope that you not only enjoyed what we presented, but also received great value from our answers to your questions.
Now remember to put this show into your calendar to join us right here on live on the Australian Stock Market Show every Tuesday at 7 to 8 p.m.
As always, thank you for joining us, and we hope that you have a great week. We look forward to you joining us again next week. For now, goodbye, good luck, and good trading.